Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, February 16th, 2017. It looked like we had a little bit of a pullback going, but we saw the intraday buyers step back in today, and it was right around the 15-minute, one of the moving averages, which I'll show you. And we pretty much closed the day where we started. Dow is actually up again. I think that's now the eighth day in a row. But the problem with this, let me take a step back for a second because I've received a few emails about this move. I didn't this melt up took me by surprise. I did not see this coming at all. I knew when I took my positions right around here that yeah we could have went up. I didn't expect this. I didn't see this coming at all. So yeah I was wrong on it. It's not the first time I am wrong. It's not going to be the last time, and that's really it. Now, do I still think there's more points to the downside than the upside from even from here? Well, let's just say from here because this is where I got short. Yes, I do. I think a bare minimum on the move down once this tops out, which it will. Anybody who believes that the market's going to go straight up and not stop, they've never been right. And anybody that thinks that the market's going to go straight down and not bounce, they're never going to be right either. So everything that goes up, it's going to take a step back. It all depends. It's not a matter of if it's going to pull back. It's just a matter of how deep is it going to go. Now I have some clues that a lot of it has to do with Woody Dorsey and stuff on with sentiment timing, and that it's going to be a lot bigger than people are anticipating. And one of the things that he mentioned, and this is going all the way back, I think it was like December 1st, was there's a kill zone that's going to be coming into the end of January. Into February, into that time period. Didn't have it, the exact time period, the exact date for it to come because it's a pattern and things have to top out. But one of the things that he had mentioned was one of the best ways to set up a kill zone or a very hard drop is to have everybody chasing the market up to the 2300, 2350 range. We hit 2350. There wasn't many people in December 1st, which was going all the way back to right around here when we were at 2180, that we were going to go up to 2350. Not a lot at all. So is this last part of the move, yeah, it did. It surprised me, and it surprised him some too. We have conversations about this all the time, and he didn't really see this melt up happening as well. And that's why a lot on the reports. He was saying that there's, it kind of feels like there's a top in place, and that's when we hit that 2298 or whatever. But, obviously it wasn't. But things haven't really changed as far as the overall view. And like I said, not a lot of people are anticipating any kind of drop. They're expecting maybe a 20, 30 point pullback. But if we start going deeper than that, we start breaking support zones. What's going to happen is this panic buying right now turns into panic selling, and that's how we get these massive, massive drops. Stuff that happens like this. This was a kill zone here. And what happens is you see the S&P shed, 100, 200 points in a week's time frame. But you have to go through the pain of, this topping process, and it's not fun. It makes anybody that's looking for the short position stupid often. But what happens is that when it happens, then anybody that was doing the panic buying, then looks stupid. So it's one of those things where it's a frustrating thing, but nothing has really changed. And I'm still anticipating we're going to have a much much deeper drop than some people are thinking, which I would say just about everybody, because we had our sentiment numbers today and they were huge as far as like the last 5 days. They're monster sentiment numbers, meaning that everybody's on the bull side. And I've already showed you the put call ratio. They're at levels we haven't seen since 2011, which we saw the flash crash then. I think it was the flash crash, but we saw a huge drop. But in any case, this is all setting up for what's here. And like I said, it's frustrating. It makes you look stupid, but you have to have patience and an open mind on things. So We had a little bit of pullback. Wasn't ready to go down today. Maybe they wait till next week. I don't know. I just don't really see us going much higher. Even though I didn't really see it there, and we had a nice run. But again, like I said, that surprised me. But really the main, I think, when we are going to see panic selling is if the 50-day moving average. This is really the first line in the sand that the bears have to push by if they want a, say, a crash like move. Now, again, I'm not calling for a new bear market. I'm talking about one of these moves that then is followed by a large move to the upside. So it's the bulls are going to be in control, or they're not going to feel any kind of panic until the bears push it through here, because it's the 50-day moving average and it's also a support zone. If they lose that, we're probably going down to the 200-day moving average in this type of move right here, where it's 3 or 4 days that drops 100, 150 points. Well, wherever it is. So this is 270. This is that's 100 points. But again, if we this is kind of where I believe we're going, anywhere between the 2171 and like I've said, the previous wave fours, which this one's at the at 2080. This is typically where the next move goes. So let's just say the worst case scenario, and it doesn't get all that bearish. And we come down to the 200-day moving average. It's still 150 points from where we are right now. So actually more than 180 points. So the thing is that this is really what I'm anticipating, is the move to come someplace down to here, and then we'll evaluate how things go. So we have bearish divergences. We're very overextended. If we take a look at the 60-minute chart, same thing. That today really did nothing as far as burning it off. We have the 5 waves up. So I would say really the first clue as far as things are breaking down is going to be a break of this 2288. Things you'll get an idea that it may be happening once we take out the 2322, and that's because really since this rally started at this bounce right here, we haven't really traded underneath it. So that's really going to be the first clue that things are starting to break down. 15-minute, this is what I'm talking about, the moving average. So everybody's all gung-ho to buy the 15-minute moving average. That's panic buying. They're not waiting for any real support levels besides just the moving average. So now when this gets taken out, anybody that did the panic buying up here is going to be trapped. And like I said, most likely going to be buying the other dip because they're still anticipating the market to go up. So everybody starts averaging down on the long position. And then when we start breaking support, like I said, everybody panics and sells at once, and we get the big move. So maybe it starts, next week. Maybe it starts tomorrow. We'll have to wait and see. The market's going to do what it's going to do. But like I said, the melt up, it took me by surprise. I'm not, I'm not going to sit there and lie to you and say that I was expecting it. I was expecting a bounce. I didn't see a melt up, and it happens. But the longer that they carry on this move, the harder it's going to fall. It's just the way that history has really showed us what plays out. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.